In this week's programme, the government agrees to underwrite mortgage risk for home buyers. Will it kickstart the housing industry? Accidents involving cyclists rise by 12% in 6 months. Should cycle insurance now be made compulsory? And a ban on upfront discounts when you take out a store card. What now for retailers to get us back into the shops and spending? Hello and welcome to Your Money. I'm Susannah Streeter. Now, this week, the government unveiled plans that could mean the re-emergence of 95% mortgages. Until a few years ago, it was possible for first-time buyers to get loans of 95, 100, and even in the case of Northern Rock customers, 125% of the value of the property they were buying. But the credit crunch and subsequent collapse in bank lending means buyers currently have to provide as much as a fifth of the asking price upfront. Now, as part of a £400 million housing strategy, the government says it plans to underwrite part of the insurance policy that can be taken out when buyers apply for a mortgage. These policies are called Mortgage Indemnity Guarentees, and they'd all but disappeared until now. Well, from on this, let's talk to independent housing expert Henry Pryor, who's here with me. Hello there, Henry. Do you think this scheme is really going to kickstart the housing market?
Well, we very much hope so, because the housing market is still in very dire straits. We have some considerable issues we've seen in reports just this week in terms of both prices and in terms of volumes. This is part of a much broader package, much of which is to be welcomed, but there are some people with some genuine concerns about these mortgage indemnity guarantees for reasons that I suspect will make great sense.
And also, is it a really good idea to bring back the 95% mortgage when, in many parts of the country, house prices are plummeting? So if you took out that mortgage now, in a few years' time, you may be in serious trouble.
Well, you may indeed. And in fact, there are places where we've seen house prices tumble by considerably more than that over the last 12 months. In Hartlepool, for example, house prices are down by 18%. So if you've taken out one of these products with a 95% loan to value, having put down just 5% yourself, then the builders and developers and mortgage companies, who are the next on the hook under these mortgage guarantees, will pay the next 3.5%, and the government, or indeed the taxpayer, you and I, are on the hook for another 5.5%, the next 5.5%. If something goes wrong, the owner has to sell the house, it's repossessed, and there is a shortfall in the value.
But it's risky, as you say. However, something needs to be done, doesn't it? Because millions are currently waiting for a house.
Well, they are. There are 5 million people on social housing waiting lists at the moment. If you were to build, just to give you an understanding of the scale of this, if you were to build 183 houses in every town and village in the land, that would only provide us with an extra 1 million houses. The government has grasped the nettle, it sees the problem, but we really have got a significant scale, a big, big hill to climb in order to try and put people back into in the opportunity of being either able to buy or indeed rent their own home.
Do you think this scheme perhaps should be extended in some way to those people, those first-time buyers who actually don't want to buy a brand new home?
Well, remember, the initiative that's being talked about by the government that was announced on Monday is only available to those who buy new homes, not just first-time buyers, but anyone buying a new home. There are some caveats in terms of the top value that they will contribute and underwrite, and obviously that's going to have an effect where values are highest in London and the South East, for example. But one of the things that we're looking at seeing coming through this week anyway was an announcement, very timely announcement from HSBC, who came forward with a new mortgage product, a new 95% loan-to-value mortgage product, at just the time when actually the government was thinking that in order to get this to happen, they had to underwrite these mortgages in this way.
The other thing is that we should all think about is the fact that actually if all these new homes are being built, that means probably that the house prices will come down. That's great for first-time buyers, but lots of people who are currently sitting on in a nice house, nice pile, perhaps won't want house prices to come down dramatically.
Well, inevitably there are winners and losers, and in a competitive market there will always be so. We saw in Rightmove's market snapshot on Monday, Rightmove, that giant of the housing websites, came out with a 3.3% fall in average asking prices. That's the kind of greed gauge, if you will, of what estate agents are looking for houses. What we will learn next week is from the Land Registry whether sale prices, which traditionally are always slightly lower, have actually fallen by a similar amount. But it does appear that house prices going into 2012 are on the way down, and as a result, people who are looking at taking out a mortgage or making that kind of commitment need to have a serious think before they do so. OK,
Henry Pryor, thanks very much for bringing those housing registry figures when they come out next week.